Hey guys, my name's Jose, and this is another episode of Buy or Pass. In this series, I will look at the financial documents of a company and decide if I had money, would I buy or would I pass? Before we start, don't forget to hit that subscribe button to make sure to get info on new episodes and other videos. So let's begin. So like always, I'm going to use the website known as lazyfa.com, which allows me to look at all these financial numbers in an easy visual format. Today, we're going to take a look at Ameritrade. I think that's ticker AMTD. Yep. All right, so we're going to start off in the income statement. So here in the income statement, we're going to look at the revenue, cost of revenue, gross profit, net income, earnings per basic share. Ameritrade just did its quarter one earnings this past January, I think January 23rd. So since we're back in quarter one, I'm going to take a look at quarterly data instead of annual data just to see how the overall quarter is happening. But if we can see annually, this past year of 2018, which ended September to late September, was Ameritrade's best year ever. It has such a huge revenue. So I'm going to compare the quarters to this quarter instead to see if we're on track for another great year. So like I mentioned, we're going to take a look at the quarterly data. Here we're taking a look at revenue. So revenue this past quarter has been as high as of all at $1.52 billion. I guess a lot of us traders are using Ameritrade and they're collecting a nice fee from us. So here we can see $1.52 billion of revenue. It's higher than same year last year, $1.26 billion. So that's a huge increase in revenue. Cost of revenue has actually also stayed kind of flat compared to last year's quarter. Last year's quarter was $47 million. This year was $49 million. So an increase of only $2 million cost of revenue quarter to quarter of the same year last year, where revenue increased by about 300 millions. So 300 million in revenue increase, but only $2 million of cost of revenue. Sign me up for this company already. So right now, just with those two, the signals are looking pretty good. We'll take a look at gross profit. So gross profit, again, best gross profit in quarter since we can look back at 2009. Last year, same quarter, gross profit was 1.21 billion. This year was 1.47 billion dollars. So it's pretty strange. We'll have to look at it, but it seems its revenue, it collects a lot of money. I mean, we can see, right, its cost of revenue is pretty low. That's wow. If we're looking at it right now, right, its revenue is 1.52 billion. Cost of revenue is $49 million. So its gross profit is only $2 billion. No, 152. Its gross profit is only about $5 billion less than its revenue. But here we can see where it's paying off. It's paying off a lot of things. So its net income this quarter was $600 million. So that's after paying taxes and everything else. So this company still has a hefty income of $600 million, and compared to the same year last quarter was 297 million. So increase of 100% quarter to year of same of last quarter. Net income increase of 100%. Earnings per basic share, again, pretty high. This quarter was $1.07 earnings to basic share. So to be honest, guys, if I'm looking just the income statement, this is looking really good. So now just make sure we're on the Ameritrade. Yep. We're gonna look at red flags. This is just another way for us to see what we just saw. And here you can visually see how this revenue versus cost of revenue compares. It does not compare at all. Revenue is a monster, and we can see gross profit. It's quarter to quarter. It's in almost 1-to-1 with revenue growth. Here we can see percentage wise. Last year we mentioned that past year of 2018, it was its best year of Ameritrade, and we can see revenue growth of 48%, where cost of revenue only grew 26.4%. Quarterly data, Again, to me, this doesn't really scare me compared to how much the revenue cost is. So there's no real point in me looking at this. I want to look at the gross margin and the profit margin. So obviously, gross margin is almost 100%. It's 96.8%, and that's just the difference between that revenue and cost of revenue. But here we can see the real meat of the bones, and that's the profit margin. That's how much of its profit it actually keeps. It keeps about 39%, and it's at its all-time high. Same time last year was 23.6%. This year was 39%. Again, really close. If it had 5% more, it would be about 100% increase same quarter last year. So that's great to see. That's great to see. And then here, there's nothing else. It's giving us a flag that percentage wise, cost of revenue is growing at a faster rate than revenue itself. But like we mentioned, revenue is a monster compared to cost of revenue. Alright guys, so next we're going to take a look at the balance sheet. So in the balance sheet here, we're going to take a look at assets, liabilities, total debt, cash and cash equivalents. Here we can see total assets. This quarter was $37.19 billion. It's been decreasing compared to its all-time high of $39.41 billion same time last year. But to me, it's not a huge decrease of $2 billion. But I'm glad that we see this total liabilities going down. Total liabilities is about $28.83 billion compared to same time last year was $31.98 billion. So I'm happy to see liabilities go down, even if that means total assets going down. Total debt, unfortunately, it looks like this company has a huge increase in total debt. This quarter was $3.48 billion compared to same time last year was $2.68 billion, almost an increase of about $1 billion in total debt. Great thing to see though, I'm really happy to see is this cash and cash equivalents this company has. It has about $8 billion of cash and cash equivalents, 8.3 billion to be exact. Unfortunately, compared to last quarter was last year same quarter was $11.78 billion. So it dropped down compared to the last quarter by about $3 billion from same year last quarter. But I'm guessing that's why the total assets also decreased. But it looks like they used those assets to pay off liabilities. So to me, it's not scary to see that much money drop down if liabilities are going down. And look, this company has enough cash and cash equivalents to pay off its total debt right now. So to me, this is looking good. So even though this is pretty weird, sometimes it's weird, right? You're seeing total debt go up, you're seeing cash and cash equivalents go down. But still, to me, this company, even though that's happening, this company is still giving me a buy signal just because the value amount of these two, right? Its total debt is only 3.4 billion, where its cash and cash equivalents is 8.3 billion dollars. So right, sometimes it's not just how the curves are going, but the numerical value of them. So now we'll take a look at the balance sheet red flags. Again, this is just another way to see the information we just saw. Here we can see assets versus liability. Unfortunately, most companies I see is about a 2-to-1 ratio. This one's not. This one's a lot closer. Total assets is 37.19 billion, where total liabilities is 1.8. Shareholder equity, great, is going up. It's at its all-time high of $8.36 billion. And just for you guys that don't know, shareholder equity is the difference between total assets and total liabilities. So by seeing shareholder equity going up, in theory, that means either assets are going up or liabilities are going down, or a mixture of both. So that's good to see shareholder equity going up. Assets versus liability growth, nothing outrageous happening here. It seems almost a 1-to-1 ratio. There's no outliers that are telling me something different, so I'm not even gonna look at them. Here is one of the great things I want to take a look at, and that's its liability distribution. And we can see 99% of its liability is on payables. This is just the vendors, the suppliers. I'm guessing all the data information this company needs to pay for all its trades. It's $26.0 billion. But I'm liking this. It's asset distribution. Most of his asset distribution is from receivables. It's money coming in. And that's 66.67% of these assets. It has $24.45 billion of receivables. And that's really great to see. I'm actually confused why this company shows no debt in its asset liability. Let's take a look at quarter. That is pretty weird. But yep, right here, what we're getting is we're getting a red flag from Lazy FA, and it's just telling us to keep an eye out that liabilities are growing at a faster rate than assets. But we can see it's almost a 1-to-1 ratio most of the time. So for me, thank you for letting me know, Lazy FA, but it's not something I really would take a look at compared looking at the numbers. There might be scenarios where those flags are giving me useful information, and at the moment I looked at the chart and I saw that to me it's not really telling me anything. Finally, we'll take a look at cash flow statement. And cash flow statement, the only one I really care about here obviously is net cash flow from operations, and this net cash flow from operation is $2.76 billion. This is money that is collecting from its company operations, and that's where this company should be making money. And it's at its all-time high compared to previous quarters. So net cash flow from operations is singing bye to me. So this company is definitely looking good for me. Next, let's take a look at metrics. And I just want to look what is price to earnings ratio. And right now its price to earnings ratio is at 15.5%. Pretty low compared to its previous quarters. So that's looking good. Telling me it's a cheap buy compared to its price. So let's take a quick overview, right? Income statement. So income statement. Revenues going up quarter to quarter. Best quarter so far. Revenue compared to cost of revenue is pretty non-existent. So its gross profit is almost 100% margin. It's about 96% we checked. Net income is increasing dramatically as well, and so is earnings per basic share. We saw those profit margins in the income statement red flags, where profit margin, this company is keeping about 39% this past quarter, and last quarter was 32.5%. So gross profit margins have increased, and they look really nice. So balance sheet, income statement is giving me a buy. Next, we'll take a quick overview of the balance sheet. Balance sheet assets decreasing, not decreasing dramatically, but its liabilities have gone down. I'm guessing they're using those assets to pay down those liabilities, which is a good thing to see. Total debt, company shows $3 billion of total debt, but this company has enough cash and cash equivalents to pay that off. So to me, that again is not a huge portion. And we saw from its liabilities that almost a huge percent is these $26 billion of payables. So to me, balance sheet, again, screaming by. That total assets, liabilities going down, huge amount of cash and cash equivalents, and pretty low total debt. Finally, net cash flow from operation, pretty big. Net cash flow is positive $1.6 billion a year. This year was $2.76 billion this quarter alone. So to me, Ameritrade is looking like a buy, a straight buy. So I hope you guys enjoyed the episode. Like I mentioned, Lazy FA makes it so easy to look at all this information, which makes this episodes go pretty fast. I'm curious, would you buy or pass on Ameritrade based on the information we just saw? Again, don't forget to subscribe, hit that like button, check out my website at josenajarro.com. I have my Twitter and podcast there. Have a good night, guys. See you tomorrow, and I hope you guys enjoyed the video.